So the video went on way too long yesterday and I had to split it up into two videos. So let's move into that right away. If you haven't seen part one, then just go back one video, but look at this information. It's extremely important. Here's a chart on the left-hand side. You're looking at Goldman Sachs. Retail trading activity has surged, and you could see the really massive increase that's been happening all along. 2020 has been just accelerating. On the right-hand side, Robinhood data show a leap in retail investor equity trading activity. Might be hard to see for you there. The darker blue line is the S&P 500, and you look at the lighter blue line. As the market had come down, investors started to get wise to it all and they started dumping their money in. They don't know what they're putting their money into, but certainly they have seen the gains as they've been buying it, and their arrogance has clearly shown if you look at the comment sections in different places. And that is something that is very dangerous because largely you have big teams of people at these financial establishments that have been paying attention to all this information, and maybe they are setting up the pigs to get slaughtered. Speculative fervor among small options traders. Take a look at the blue line. Small trader call buys to open. This has accelerated to a level we haven't seen. At least this chart here goes back to 2000, and it's way beyond anything we've ever seen before. And this is what we have time and time again in all of these different bubbles. We have these traders that don't know what they're doing, but certainly to do a quick Google here and there, they type it in, they figure out how to make it happen, and they start to become day traders. There are so many different examples that I've read about where children are getting into trading now, and you also have people quitting their jobs or looking to quit their jobs because now suddenly they're an expert at what they're doing. This is dangerous territory. Buying frenzy. The number of overbought stocks hit highest since 1991. The RSI, which is something that I've talked about in previous instances, you can actually check it out if you don't know what it's about. I have a video in my free e-course which you can take a look at. This is just showing you in the S&P 500 the number of members with the 14-day RSI greater than 70, and that has accelerated to the highest since 91. All right, so this does happen time and time again. We see as the speculation increases and then they get a little bit more risk adverse and then it just goes up and down. But right now it's really high, and that isn't a good sign when you see that, because you want buyers and sellers. You do not want the market to continuously go up. You want this thing to be jagged and of course on its way up as you make more money along with the price appreciation. But this right here has just been straight up every single day. There's been a couple days all along in this bull market that have not been good, and otherwise it has been unbelievable to see how fast this has happened. Speculators' net bearish bets on the US dollar grew in the latest week, according to Reuters. And this just shows you what's been happening for the US dollar. This is short-term noise, of course. We don't actually expect anything serious to happen to the US dollar in the near term. Now, in the long term, that's a whole different story. But I thought it would be important just to show you what's happening in the markets themselves. The value of the net short dollar position was $9.51 billion for the week. In the third paragraph, you can see the net short position was the largest bearish position speculators have held in the 6-week period here. These two posts on Twitter are very interesting because they're talking about pension funds, and that is one that gets ignored time and time again, yet it is such a critical issue. If you see this chart on the bottom here, it might be hard, I know the font is really small. Essentially, we're looking at the funding ratio for the different states. And you could see Wisconsin, in fact, at 70% funded ratio, which is quite high. It's actually underfunded, but when you compare it to, for example, Illinois, 26.6%. How are they ever going to pay back? Well, of course, they're not. They're not going to be able to give all those people their pensions. They're not going to be able to resolve this problem. When the stock market had gone up by a whopping 400%, I think it was, if you look at what's been happening with all of these different markets, in fact, they've basically all moved in the same direction. That's up. Whether it's 400%, whether it's 100%, doesn't matter. They've been moving up. And yet, somehow, they still can't keep these funded. you know there's some activity going on that is illicit. You know that. Top one said that pensions have lost an estimated $2.5 trillion in Q1 due to the market drops, according to the OECD. And you could essentially see the direction here. Again, I know the font is small. I just wanted to cover this. It's really just a prop to put something while I'm talking here. But what we're looking at is one very serious problem. Actually, Robert Kiyosaki wrote an entire book about this. But when you see what's been happening here, it's a problem simply because so many people rely on their pension. They rely on that to come in. That is probably the main source of their income when they retire. And yet, if they slash that, so if they're expecting, let's say their pension is going to be half of their income, or maybe even just a large percentage of it is the pension, and suddenly a piece of that pie is cut out and taken away, what do you think they're going to do? Are they able to feed themselves with the rest of that? Here, use your food and your electricity and all of this. Are they going to be able to survive on that? Some people, the answer is no. This is the report from the OECD, Assets and Pension Funds and All Retirement Vehicles in 2019, broken down by country. So if you're interested in seeing it on a country level, you can do that. It just shows you pension funds percentage change, and you can see it in the millions of dollars, the GDP percentage, and also just goes through it all. It's self-explanatory, but if you want to see it for yourself, you can just take a look. United States is down here, of course, and you can see other countries like Canada and so on. They're all in bad shape as far as I'm concerned. All of the so-called developed nations aren't doing so good with keeping these funded, aren't doing so good with these massive and bloated systems that they've created that, quite frankly, they cannot pay back. I just wanted to finish off this video by mentioning this article. It's referencing Hawaii, but it really applies to so many different places. It's referring to this particular community that, if I try and pronounce it, I will absolutely ruin it. Saw the largest over the year unemployment rate increase in April. Look, 32.5%. And that just shows you how accelerated this can be in an area where you're relying heavily on tourism. The jobs are surrounding the tourism. You got the hotels. There are so many different things surrounding it, and suddenly everything stops. No travelers coming in. You have a big problem, big problem for this area. Now, is it going to be restored in a heartbeat? I really don't think so. Perhaps it can be a step-by-step process, a gradual reopening, and then you have more travelers moving in, and this starts to get things happening again. But the longer it stretches on for, the deeper the problems will be. And that just shows you that what we're seeing today, although it's being overlooked by the stock market, my goodness, it shouldn't be, because it's really, really bad. Do not lose sight of what we're seeing here in the real economy, because it's affecting so many different people in so many different ways. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me, so I want to thank you for that. If you want to check me out on Instagram and Twitter, I'm creating content every single day, so definitely check me out at The Money GPS. I just wanted to spend 1 minute right now to thank everybody for everything you have done here at The Money GPS. Whether that's giving thumbs up, whether that's commenting on these videos, whether that's sharing these videos, all of that helps me out a lot. Of course, when you do so, there's more engagement, and what that does is it pushes the videos higher up in the search rankings, making them more likely to appear when people are, let's say, watching a video and they are somehow relevant to each other. Now, if you are subscribed to this channel, I want you to make sure that you hit the little notification bell, because so many people don't do that and they do not get notified. Also, make sure that you are still subscribed, because a lot of people think that they're subscribed, but they've been unsubscribed. And I get information every single day, people telling me, I used to be subscribed, I've been watching all your videos, but somehow I was unsubscribed. You got to make sure you're signed in. That's part of it. But for so many people, they are, and it still happens. So definitely make sure, and there's not much we can do about it, but just maintain what you've been doing, check up on it every so often. That's all. Thank you very much. If you want to learn how to sell stuff online, you want to understand e-commerce, it's confusing, I know, so definitely just check out my e-course because it's free, the AmazonGPS.com. The financial system is convoluted, it's complex, and so I wanted to break it down and make it easy. I did so in these two books. You can check them out at the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? It's really important you check it out. Click on it, I'll see you there.